Now, inflation concerns are one thing, but growth concerns are another as well. And the Federal Reserve has a dual mandate, but does it prioritize one over the other? And how far do you think economies can slow down? And are we going to be talking about the R word very shortly?
Yeah, I mean, I think that the Fed clearly wants to get inflation under control, and the measure it's been talking about really is wage growth. I mean, if you look at the Atlanta Fed signals, it's got sort of 6% wage growth. It would probably like that to get down to 3-4%, and that means more tightening of interest rates and probably quicker than expected. On the other hand, it doesn't want a recession. And if you can see what's been happening, a massive change in the last month has been financial conditions, and global financial conditions and US financial conditions have really risen. And that will start to slow down, and that will be as effective as an interest rate hike.
So a recession in some quarters is slowly being priced in. So how does that change your strategy looking ahead, Sean?
Well, look, our base case is there's not going to be a recession, particularly in the US. There could be a couple of quarters of very weak growth as the impact of rates goes up, and we don't get any more sort of growth drivers. And I think China will also be part of the equation as well when that starts to pick up and grow. But clearly, markets are selling off growth. They've been very cautious at the moment. Everything's going down, and we're in a classic risk-off. One of the issues, Rish, when you look at it, is why are sort of Fed and other people surprised about inflation? It's because there is still pent-up demand. So I think everyone says, well, inflation should come down because supply chain's getting better, etc. But now we've got the resurgence of services. So you've got lots of people in the US who have got money. The balance sheet of the household is much stronger than it was pre-COVID because of all the fiscal and monetary support that the US government got, and they're now spending it. And that's leading to, you can see the airline figure, that's leading to pent-up demand and in areas where there's probably not as much supply.
So, Sean, in that scenario, what do you do? I mean, the sell-off has been so deep, $11 trillion wiped out, from the end of March alone. And do you see opportunities? Is value beginning to appear?
Well, I mean, the US economy is still strong. Earnings have still been relatively good, and valuations are looking more attractive. There has been, it's not been, there's been a differentiation in the sell-off. You've had long duration assets selling off more, which is natural. And so, we would, some of the large caps now are looking very interesting in the US, but we are expecting over the next month for more risk off to come. And then you come to Asia, which is the other side of the equation, where the problem's been no growth, and particularly in China, lack of growth and disappointing growth. And at some stage, that's got to pick up. And at some stage, the China market will be beginning to price that in. And actually, some sectors already are not falling as much. So if you look at the reopening plays in China, I know it's maybe odd to talk about that when we're all in lockdown, and particularly in Hong Kong as well. But they are steadier. They're not falling as much as other sectors. So people are prepared to look through and say at some stage, China will open up a bit more and there'll be a bit of a V shape. There'll be a pent up demand. But at the moment, it's risk off. So I would be patient and be waiting for opportunities to be adding both to US equities and also to Chinese equities.
What would it take for you to start looking at emerging markets? At this point in time, perhaps it's buy if you dare, but when will you seriously look at EMs?
Well, we are already interested and positioned in certain EM markets, but they're quite small in the index. So Latin America is actually going through a very, very good period of time because the cash flows from what's been happening in the commodity and the oil market have been very positive. And a lot of these governments have already raised rates. So the currencies are actually holding up better than they have been in previous cycles. The same would say to South Africa. And also, we're beginning to see ASEAN, opening up more. And we think relatively that's still a good trade. But they're quite small in the overall index. We still like India, but the oil price will probably keep a cap on prices for a while. So the really key call is China and the bigger markets of Korea and Taiwan. Korea and Taiwan are too correlated at the moment to global growth. So it really has to be when China starts to pick up. That would be the big call in EM. And I think we're nearly there, but I would wait a few more months because we can't time what's going to happen in the reopening. But clearly the government are trying to talk up a lot more policy support, and at some stage that will come through. So I would expect by the third and fourth quarter, China will be looking very interesting relatively.